Hey super swing traders, I hope you're doing good. Today we're going to take a look at some charts and see where we can identify supply and demand order flow and trade it for income. Let's take a look at the New Zealand CAD and see if we can find supply and demand levels, or at least get a bias of what's going on. On the monthly, we have a downtrend. This downtrend, also this level of supply is in control. It's been tested one time and two times, and now it's in control. It's dropping. So we have a pretty strong area of demand down here. So it looks like price is consolidating in between this. So we can think about going long here, but since our highest time frame is in the downtrend and supply zone is in control, we can't just set an order here and buy here. We want to wait for price to actually show us that it's going higher. But we don't want to short either, because this is a valid area of demand, but it's not a level where we can just set our trades and buy. We want to wait for confirmation. Okay, on the weekly we have price in a downtrend as well, but we have a level of demand down here that's been tested and rally, drop, tested, rally, drop. So it looks like it doesn't have enough power to go up any higher, because you can see this bearish piercing candle. So let's say that this is our range, or our base. This is our base and this is our candle, and we want to draw a level of demand. This is not actual level of demand, but I'm just showing you. So let's say this is our level of demand and price rally. We want price to go higher. We don't want it to just come back to that level, otherwise it shows us that there's not a lot of power. So if price does this, then and then rally, then yeah, it's got a good amount of power and good amount of unfilled orders that was left behind. But in this case, price came back to it within the next week and took a week to form this candle, and then the next week it formed this one, and this is not what we want to see. We do not want to see that. Yeah, we do not want to see that. We don't want to see this kind of setup. Okay, we want to see price move very strong away, touch this supply, and then that gives us the liquidity to go long. Okay, so we want price to go up here, touch this, and then drop, and then we go long. But since price is doing this, we don't want to go long on any of our lower time frames at all. So when it does this, and let's say that you have a really good, nice forming demand zone down here on your lower time frame, and especially your entry time frame, which is the daily. When you have this, if you can see my cross here, this level of demand is right here that I was talking about. And when you have this, and then you have this strong candle and then another strong candle down, we do not want to go long right here. So we don't want to go long there, because this is signifying that price is going to break this zone, because this is showing us that our higher time frames is what's showing us what price could be doing on the overall on the higher time frames. So a higher time frame is showing us that price is bearish. For example, our monthly is showing that price is bearish, is dropping. Yeah, it could be forming all these, and you can catch these little drops if that, but we want to lean against all time frames and wait for a clear uptrend or a clear signal to go long. Right now there's all these volatilities, and I don't want to trade these. These are not anything. You could draw your zone here, but it didn't work. For example, we see that historically, we see that if you look at this zone, if you were thinking about going long on this zone right here, this zone is actually this zone, and while it was forming, it was probably, when this move right here to here is this candle here, and then when it dropped, it formed this red candle, but we didn't know that it was gonna be forming like that. But as soon as it dropped, as soon as it did not do this that I was talking about earlier, as soon as it did not do that and it formed another bearish candle right next to your base, then we know for sure already, hey, I mean, it could work, but when it does this, we do not want to go long no matter how good it looks on your lower and entry time frame. This is not really good. Yes, could it work? Yes, but in this case it didn't work, because if your demand zone was right there, if this was your demand zone, you could see that price came back and it broke, so you would have been stopped out for a loss. And the reason why I know that, or the reason why I did not take this trade, was because of this. And you can look at my other videos on New Zealand CAD to see. I was warning that, yeah, don't go long if you see this, or if you start seeing, if you do not see this on your middle time frame, do not go long. And there, you know, it formed this and then it broke through this level of demand. So just don't trade anything that you see. You need these middle and higher time frames to give you a general idea of what's going on. So just to recap, you can see that, yeah, this is good demand zone, but the base is not very strong. The base is these wiki candles. This departure is not really strong. You see that it's just these, you know, base, and then this is strong, and then base, and then strong. So it's not really strong. I want to see, like, this is what I want to see on the daily. I want to see these strong candles. I want to see these strong candles. I don't want to see those little wiki tails, these little candles that has the tails. And then when you see this on the higher time frame, yeah, it looks good. It's got this and this. No, it doesn't. It is not good. This base is not good. This departure is not good. And also the weekly, this candle did not go stronger. I want at least 2, 1, and then another strong bullish candle. I don't want to see this candle and then a bearish candle right next to this. Can it work? Yes, of course it can work, but according to our plan and our trading methodology, we do not want to go long on these setups. Even though this looks great, our higher time frames are telling us not to go long, and it can be that one edge in your trading plan to prevent a loss. Yeah, if it works, that's good, but we do not want to do that. We want to go on high odds, high probability trades. Okay, I hope you guys found this useful. I hope that this helps you, gives you a little insight on your trading plan and how to analyze this Forex pair. Thank you for watching this video. Please remember to give it a thumbs up if you enjoyed it, and leave a comment below. If you're not already subscribed, please click the subscribe button below and click that little bell icon. That way you'll get notified of the next video that I publish. Thanks again for watching.